I learned how to trade ICT. Yeah, I know this sounds absurd, this sounds funny, and I know you guys feel betrayed and stuff, but I'm telling you guys, hear me out. So somebody recommended me to try out this particular ICT concept called the Power of Three. I'm pretty sure most of you have heard about it. It's really famous. All right. So the Power of Three basically is accumulation, manipulation, and the distribution phase. So these are like the three phases of the market, the three price legs, or what price does often or most of the times before it moves, all the time it does it. So with that knowledge, you know you apply with the daily bias. A daily bias is basically your take on a larger time frame, where the market or where you think the next candle will go to. So this strategy solely relies or solely is about you predicting the next candle on the daily time frame, right? If you can predict the next candle on the daily time frame, that's all you need. So I'm like, okay, that sounds kind of easy. It sounds easy, right? But you know that when the daily time frame comes out, it doesn't just come out and drop. It comes out and maybe it goes up a little. That going up a little is called the manipulation phase. Then it drops now to distribute, right? So if you know that one, then you know that, okay, if I step down on a smaller time frame, immediately a candle closes. I wait for the sweep and I take the chalk to the downside. The chalk is the change of character. I take it to the downside to sell the market, right? But now, where do you think or is the best spot for you to start anticipating for a change of character? That's the thing. There's more to it. It's broad, but it's not broad. It's very simple. I backtested this thing last night. Like, I spent majority of my night backtesting this thing. Then before I slept, there's this pair AD card. AD card. There was a setup on AD card that pretty much was good looking and everything. So I did the same thing. I applied the same knowledge and I took the trade. I woke up this morning, it worked out. It worked out very well. As a matter of fact, it went straight to TP. I'm like, okay, I'm impressed. Right? Like, it's not like support and resistance, you hold a trade there for like hours, it's gonna go up, down, up, down, up, down before eventually going somewhere. But this one just entered and like straight to business, you feel me? Like, yeah, that was pretty good. So of course I didn't trust it fully, so I put just 0.5% on the trade instead of 1%. I'll show you guys the trade and I'll do guys a very, very short, quick breakdown, of course, and I'll reveal everything to you guys. So if it's something you want to try out, okay, I'll be making more videos on this because I think it's really, really good for a while. Okay, so I'll see you guys here. Okay, guys, so this is my screen. Welcome back to my screen. Let me just take you guys, let me give you guys a very, very short tour, a 1-minute tour of the setup, how it works and how I took it and how it went out, right? So this is the 5-minute time frame here. This is the finished product. So let me bring you back to the beginning of time, which is the 4-hour time frame, because that's where basically I started the analysis. So here I am on the 4-hour. Like I said, look at it's a very, very small trade. So very, very tight entry, tight exit as well. So let me explain you guys why and what I saw before taking this trade. First off, I will have to use my replay tool about, let's put it there. Okay, beautiful. Right now, I'll just shift this to the side or shift that to the side. Now, look at this, right? Pay attention. So what the power of three is, like I said, it's just like it's the market, three phases of the market, really, like, accumulation, manipulation. So after the market has accumulated price, like, accumulation is basically consolidation. So like after that period, there's usually another period called the manipulation, which the market would drive a set of buyers or sellers to the wrong direction, then eventually moving to the opposite direction, then distributing price to the opposite direction. So usually the distribution phase is usually like impulsive and powerful and stuff. So with that knowledge now, like I said, guys, what you want to do is you want to come on the daily time frame and identify an FVG. FVG stands for fair value gap. So instead of me using the daily time frame, I'm an intraday trader and stuff, I want like, I want quick stuff. So I'm using the 4 hour time frame. So these are the two time frames you use. So this is how you use it. You use the daily time frame, then you use the 15, the 30 minutes. So I use the 4 hour time frame and I use the 5 minute. So what you want to do is you go on the 4 hour time frame like this one. You identify a fair value gap, unmitigated fair value gap, unmitigated, you know what I mean? Untouched, clear, virgin fair value gap. That's what I'm saying. So this gap here just recently formed in this recent pullback. So now I'm not concerned. I don't care where the market is going. If the market is coming down to, tap some other block here or sweep liquidity up or liquidity down or blah, blah, blah. Nah, none of that stuff. None of that stuff. I don't want anything complicating this for me already because ICT in general is already it's too complicated for me. So I want something very simple and basic. So this is something I can work with here, right? So the gaps here are the imbalances in the market. So clearly, I already saw this one, and this one is very clear. And now you know that, okay, if this gap is being formed, right? The market sometimes fills these gaps on its way up and on its way down. It does not necessarily have to leave it before coming back. Like here, look at this. The market formed this gap. This is kind of one, kind of two, and this is kind of three in here. This make kind of. Then the market came back with this kind of wick to fill this gap, then continue to journey up. So on the market's way back, you will not come and be like, oh, fair value gap. No, this gap has already been mitigated. This is efficiency. So the only inefficiency here is this recent one here that's already been formed? Is this gap here? So now I want price to do, and I want price to trade into this fair value gap with a candle and close bearish. So let me play a candle there. Oh my God, I just played it too much. Anyways, I just want to give you guys the whole context and how. Let me just go back again. One candle behind. I overplayed it. So this is the candle that is traded inside, right? This was our candle. And now this is now our new candle. You can clearly see that this candle has traded its way into that gap. Now I'll not come and pull I'll not come and sell here blindly because I've seen a fair value gap. Just place a sell limit. No, you see a fair value gap there, right? Now, what I want to see next is a bearish candle close, which this one pretty much looks like one, right? Okay, guys, I have a call. I'll just pause right here. Okay, so I'm back. Now, like I was saying, you can clearly see that this candle has traded into our fair value gap, which is step one. Step two is we want to make sure that we have a bearish close. Now, the candle here that could enter this gap could be bullish. Then we wait for the next one to be bearish. But now, in this case, the candle here that entered happened to be the same candle, and it turned out to, be bearish as well. So I can see that there is, impulse. I can see that this market, there is a high probability that the next candle that comes out will be bearish. Now, like I said, the overall idea of this strategy, the overall, concept here is predicting the next candle. What would the next candle look like? Will the next candle be bearish or bullish? That's all we need to know. That's all we want to do here. That's all we strive to achieve. Now, let's say we have a bullish candle here. Then I was like, okay, what's the tendency or what's the probability that the next candle that follows this one will be bullish too? That's it. Okay, there's nothing else. There's no some special levels now. Just what's the probability that the next candle after this one will be bullish? If you know that, then you can trade that candle on a smaller time frame, of course. Now, if I know that this candle here is bullish, then I'll go on a smaller time frame and I'll just wait for price to change character and sweep some lows and stuff. Then I buy the stuff to the upside. But in this case, I know that the next candle here might be bearish. I mean, there's a high probability, there's like a 60% chance that the next candle will be bearish. Looking at this candle and looking at that gap that has been mitigated. Now I know this and I go on the 5-minute time frame. So I'll just give you guys like pretty much how I saw it before I took it. So welcome to my 5-minute time frame. This is the 5-minute. Now, like I said, when the candle forms, what I want to do is when the new candle comes out, I want to see a sweep of them highs. I'm looking for the market to drop. then you know that before the market drops, it goes up before it drops. Like here, let's take for instance, this candle. I don't know if you can see this candle here. Now, this candle came out after this other one, right? It didn't just come out and drop. What did it do? It came out, went up with a wick right here before dropping, right? So this push to the upside is called liquidation. One, it's clearing of buy side, sell side liquidity. Is clearing out buy side liquidity right there. It's liquidating people out of their positions as well. It is also sweeping them highs, which is like liquidity sweep, and it's also called manipulation. So at the same time, it does all of these things at the same time. It's liquidating people, sellers out of the market. It's inducing buyers to jump in thinking it's an uptrend. It is also sweeping out stop losses that reside above them highs, right? So all of that these are the activities being taken place inside this tiny wick you see here. So what I'm saying is, in summary, what I'm saying is, when the wick moves up, it's manipulation. The wick is moving up so that it can move down, right? So what I want to see is that change of character, so that I know that okay, maybe from this point the price wants to start pushing down. So that's how I know the price wants to start pushing down before I enter. So right here, you can clearly see the price has pretty much swept these highs. You can see these highs here. Guys, I don't know if this is my mouse or something, but I hope it's not. I hope it's just my mouse because it's malfunctioning. I'm trying to use this thing. Man, let me just put the thickness so that you guys can see very well. See right there. So these are the highs here. You can see that the market just opened up and poop swept it. Now, when you see this kind of impulse, you know that okay, yeah, something is happening here. Then when I saw this now, I saw this gap here immediately. So basically, how I enter is I enter now on the gap on the 5 minute time frame. How do I do it? I go to the midpoint of that gap. Midpoint, right? The middle of this gap is where I want to get in. Let me just grab my. I think I had the trade here. Let me just push it back this way so you guys can now see. This is the exact same. Oh my god, this is going to take forever. Okay, be patient. Okay, patience is a virtue. So let's just wait because I don't want to start lifting it up and down here. I'll miss the coordinate. I don't want the numbers to change. I want it to stay on the same level, same trade, and the same everything. That's just what I'm trying to achieve here, guys. Jesus, this is slow as fuck. Man, like 3 minutes has already gone. Okay, I think this will work. Okay, so this is the trade, right? I took my entry midpoint of this fair value gap, guys. Like I said, this gap is my entry. This is the gap right there. So that's where my entry is. I put my entry and I put my stops above them highs, on top of the highs, right? Then I look for the low, which is this one for liquidity. This is the last candle on the 4 hour time frame. This was the last up candle, right? So I'm taking the low of this candle as my exit. So if I play price now, you see what price did? Price, dropped down, started pulling up, then activated my order. I didn't really suffer much drawdown, guys, and boom, it started moving in my direction and basically smashing my take profit. Yeah, so that is how this trade played out. I want you guys to, tell me or give me your take on this. I don't know if I explained it well because I'm not really, like I said, I'm not really an ICT person. I just, I was just recommended to try this out, and I tried it out. It works pretty well. So if you're an ICT person, comment down below. Comment down below. Comment down below if this was well taken, if it was well executed, and everything. So give your boy a shout out. There are links down below. You can join my free Telegram. Click the subscribe button. I'll see you in the next one.